Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Wednesday, the 21st of June, the longest day. Starting off with the FTSE 100, where we've had a little dip to test the 200-day moving average and the floor of that rising trend channel from back in August last year. That support area around 75.10 with the trend line there from the autumn. On the upside, we're looking for a break either of the resistance line there from April, which is currently around 76.50, and ideally the break above the 50-day line, 77.21, but that seems a long way away, and we still cannot rule out a possible break of that support line from October and a dive towards 73.7400. RSI at 43, that's the reason for the caution, because it's on the wrong side of neutral 50, and that allows scope for further downside or support testing. Onto the DAX, which was outperforming the FTSE, and I suppose still is, but here we've had this market literally looking at that uptrend line there from last year, 16,100 at the moment. We've got support there notionally from the 50-day line, 15,900, and then turn of the month support, 15,700. But at the moment, we might get away with 16,000 plus and a move right towards the top of that channel, 17,200 by the end of next month. But too early to say that yet. Really obviously want to clear that rather sticky 16,300 area before assuming that a new leg to the upside is on its way. But the RSI has remained above the neutral 50 for much of this month, neutral 50 level, that is, at 53. So that does mean the technical glass is half full rather than half empty. On to the Dow, and here the situation is that after its break on Monday, we're back and testing the old broken 34,000 April resistance line, April last year, that is. Hopefully we'll stay above that. If we don't, then we've got the 50-day line there around 33,600. That's, I suppose, the lowest we think this market could go, but obviously the floor of the channel there around 33,000, and that's just above the now rising 200-day moving average. If we do break to the upside, i.e. hold above 34,000, got 34,900 at that March resistance line as a potential target, and then up to 37,000 maybe by the end of the summer, which obviously sounds rather optimistic. RSI at 57, which is right in the ideal spot for actually heading higher. So let's see if the rest of the week will be more positive for the Dow. On to Bitcoin, where the first stirrings of recovery were seen earlier this week, and now you can see that we've finally broken that line of resistance from April and the 50-day moving average, and done it quite sharply as well, so pretty impressive stuff. We're now looking at obviously a retest of the 31,000 area April resistance rather, and ideally by the end of next month up to 35,000 at the top of that rising trend channel from this time last year. That would be quite a coup after that 2 to 3 month pullback that we had. But the plus point here really was the way that we found new support at old 25,000 resistance and didn't have to head back down to the 200-day line. Markets that avoid the 200-day line like that when testing for support tend to be regarded as very strong. On to the stocks, and a related stock to Bitcoin obviously is Argo Blockchain. Surprise, surprise, it's actually rebounded now, so that might be serious in terms of flagging that Bitcoin and cryptos are back after the recent attempts to undermine the likes of Binance, etc., etc. Bear trap gap reversal here for Argo, so basically gapping up today, and ideally be closed back above the old support for the shares around 8.3 pence today. If we can do that, then hopefully the 50-day line at 10 pence will be the minimum on the upside, and then the top of that broadening triangle from March at 16 pence, the best 1 to 2 month time frame target. RSI just below 50, ideally be closed above 50 today or tomorrow, but interesting development there at Argo. On to Avacta, where it looks as though, at least for now, the bears have had a pie in the face, quite a big pie in the face actually, so that is good. We managed to break that line of resistance there from February at 105, which was highlighted earlier in the week, and actually gapped up today, which is even better on the news that the company's had. All that's missing now probably is just an end-of-day close above that 50-day line around 116. If we can do that, then there's every chance that the shares can go back to the top of the range around £1.40 over the next 2 to 4 weeks, which obviously would fill the bears with horror. On the downside, early and end of day close back below the gap. The floor of the gap there at 111 would be the first sign of a failure here. And then obviously want to stay above 105. But as you can see from the chart there, really £1 to £1.40-ish has been the preferred range for the shares over many months. And that doesn't look like that's going to change. Onto a stock which is not quite so high profile. In fact, many people might not even have heard of it. We've got Clean Power Hydrogen. And here the situation is that even though it's a low-profile company, we've had a nice bounce off a rising 50-day moving average around there at 22 pence. Initial target here, the 200-day line at 30 pence. And then maybe over the next 2 to 3 months, end of the summer, as high as 50 pence plus. Obviously a punchy call there, but it looks like a decent setup there with that rising 50-day line. On to Chill, where people who are telepathic have been buying the stock earlier in the week ahead of the latest news. Bounce off the rising 50-day line, which was obviously talked about earlier in the week here. We're looking for 10 pence to break, because that was the resistance on the way down, maybe actually 10.5 to be safe. And above that, then hopefully the shares can head up to the top of that rising trend channel that I've drawn from last November, as high as 17 pence. And that could happen as soon as the end of next month if we get a decent end of day close above 10.5 pence, or end of day closes above that. Only back below the 50-day line on end of day close now really delays the recovery there at Chill. On to KORO, which I know a lot of people are willing to go higher, and here we've had a nice bounce over the last couple of days, this week actually, off the 50-day moving average after a gap higher that we had at the beginning of the month. So that's a very strong setup. If you gap up and then find support above the top of the gap, that tends to be a very good signal. And if you bounce off the 50-day line 2 or 3 times, as this has done, and have hammer candles, that's even better. RSI bounce above the neutral 50 level as well, so looking for 0.24 hopefully over the next few days or sooner, and 0.34 maybe as soon as the end of next month. Again, a punchy call, but that is what we are looking at there with that gap to the upside. In fact, that top of the triangle actually pointing really to 0.25 or 0.26 rather than 0.24. Only back below the 50-day line at 0.19, really questioning a potential decent move to the upside. Speaking of decent moves to the upside, we've had big news today from Hydrogen Utopia, and big gap to the upside. We already had a bit of bullish divergence going into this week with the price action bumping along the bottom just above 5 pence. But bullish divergence there, unfilled gap to the upside today. Really looking for an end of day close above the 50-day line, currently around 7.4 pence. We haven't been above the 50-day line since the shares came to the main market at the beginning of the year, so that would be quite an event. And initial target here, hopefully over the next couple of weeks or sooner, up to 8.5 pence. If you're a fan of the shares and looking for greater glory, then I suppose the next level up would then be a line of resistance heading towards the 200-day line at 13 pence, but maybe that's for later in the summer. Moving on to Hemogenyx, which has delivered a V-shaped reversal, which is nice. Here, basically, a bounce off the floor of the range, a slight bear trap there that we had, and the share should easily head up towards the top of the range now, around 2.25 pence, hopefully over the next 2 to 4 weeks or even sooner. Upside value while we hold above 1.5 pence now, which was support on the way down, and you can see that the RSI now above neutral 50 as well. So that is a help. Anything with AI in the name or in the business in America has been a massive winner over the course of 2023. Not quite the same kind of magic over here, but here we've got IQAI, and here neckline resistance around 2.9 pence. We break that, looking for a relatively easy 4.5 pence by the end of next month, on the basis of the extended support for the RSI around neutral 50, and the way that the 50-day line is now rising, and that normally adds positive momentum. We also had an unfilled gap to the upside back in January, and the shares have remained above that gap, obviously, very well ever since. Moving on to a stock that I haven't covered quite a while, Panther Metals, and Here you can see that we've got a rising 50-day line near the lows, which is, as I said, normally almost the same chart as the IQAI actually. So neckline resistance there around 3.6 pence, above that on an end-of-day close basis. Looking for around 4.5 pence by the end of next month. So looks like the bear run there hopefully is now over with Panther. On to a stock which has been one of the best stocks of the month in terms of the rebound we've seen. We had an initial target there around 11 pence. And also we've highlighted that the shares are going into a golden cross, so the 50 and 200 day lines both rising. Next target after 11 pence is up to as high as 15 pence over the next 2 to 4 weeks. So great move there, and that unfilled gap to the upside, bear trap gap reversal, great signal, and also had bullish divergence with the RSI thing. So everything going on there at Predator. Hopefully no more fundraisers for a while. On to Union Jack Oil, where the previous rather ambitious sounding target at 32 pence has been delivered, and the shares have actually stayed around there, which is quite handy. Looks like a mid-move consolidation here, bull flag, tight bull flag, which is always good. And end of day close through 33p could give us a new leg to the upside as high as 42 pence by the end of next month. So UJO looking like it is in good shape at the moment. On to VAST, where there's lots of RNSs and other stuff coming out at the moment. Here, simple, it looks like simple charting, if the charting is ever simple, a range between 0.5 and 0.8, and hopefully the shares have done enough with the latest support above the 200-day line, or at the 200-day line at 0.46, to get up to 0.8 as soon as the end of next month. If you're looking for a further trigger, then that would be the RSI heading back above neutral 50 versus 44 at the moment. And obviously the recent resistance 0.58 would also need to be broken. But if the RSI goes first through 50, that would be the signal for the stock. That's it from me today. More updates tomorrow.